is equity? This video will tell you what equities are and more things related to them. Let's begin. What is equity? Equity, also known as shareholders' equity as well as owner's equity in the case of privately owned companies, is the sum of money that would be handed back to the shareholders of the company case if all of the company's assets were to be liquidated along with all the debts being paid off during the occurrence of a liquidation. It is the worth of a company's sales subtracting any liabilities owed by the business that were not transferred with the sale in the particular instance of an acquisition. Shareholder equity can portray a company's book value. Equity could be used as a form of payment in kind. It also denotes a company's pro rata ownerships of its sales. Equity about the finance world. Equity is a crucial concept in finance that takes on multiple interpretations based on the case. Shareholders' equity, which is obtained by subtracting a company's total assets from its total liabilities, is by far the most popular type of equity. As a result, shareholders' equity is primarily a company's net worth, the amount of money that the company's shareholders would potentially obtain if that were to liquidate as shareholders' equity. Return on equities versus equity. The return on equity, or ROE, is a financial performance metric computed by dividing the net income by shareholders' equity. Since shareholder equity equals a company's assets subtracted from its debt, ROE is also known as return on net assets. The return on equity measures efficiency in a company's assets used to generate profits. Equity, on the other hand, can have a variety of meanings. Still, it most commonly refers to company ownerships and assets ownerships, including stockholders owning equity in a company. The return on equity, or ROE, is an economic metric used to measure how much profit a business generates from its shareholders' equity. Variations on equity. Equity is a term that refers to the amount of money, a stock, or other security that represents a company's ownership interest. Equity is also the sum of the funds invested by the owners or share owners plus the retained earnings on a company's balance sheet or losses. This is also known as stock owners or shareholders' equity. Equity can also be the distinctions between the homeowner's latest fair market value and the amount owed on the mortgage by the owner. It is the sum received by the holder upon selling the home and paying off any liens. The real estate value is another term for property value. Equity as used by investor. For investor, equity is an important topic. For example, when evaluating a company, an investor might be using shareholders' equities as a criterion to determine whether a given purchase price is too high. If, for example, the business has previously traded at a price to book value of 1.5, an investor might well be reluctant to pay more than just that, except if the company's prospects have fundamentally enhanced. Conversely, an investor may feel more comfortable purchasing shares in a relatively weak company if the price paid is adequately low about the company's equity. This is everything about equities. Comment down what was a new thing that you learned with this video.